Welcome to the Investors Trading Academy Economic Calendar of the Week. Each week our news analysts review the upcoming economic events that you should be monitoring. The statements of ECB President Draghi during last week's press conference surprised the markets, obviously as yields declined substantially and the euro weakened versus the USD. The most important message was that on March 10, when the new ECB staff projections for inflation and GDP will be available, it'll be necessary to review and possibly reconsider our monetary policy stance. These statements did not surprise us at all, as, since the last meeting in early December, important economic factors have changed. The oil price, for example, has dropped nearly 40%, and the oil price futures have dropped below the levels seen in early December. Furthermore, the growth prospects for emerging markets have deteriorated further, in turn dampening global demand. In early March, the ECB staff is not only going to revise its inflation projections for 2016 and 2017, but will furthermore release its first inflation estimate for 2018. The ECB will be vigilant if second-round effects are a threat, and oil and commodity prices will feed through to other prices and could thus trigger a downward spiral. There are no key indicators to watch in China in the coming week, so the US will be in the limelight. Economic growth data and the Federal Reserve decision are the highlights. The Reserve Bank of New Zealand meets on Thursday, and the Bank of Japan is scheduled for Friday. The week kicks off on Monday with the release of the Dallas Federal Reserve Index. On Tuesday, two measures of home prices are released, with consumer confidence and influential Richmond Federal Reserve Index and weekly chain store sales. On Wednesday, the Federal Reserve ends its two-day policy meeting with the decision and statement with no changes expected. New home sales data is also released on Wednesday, together with the weekly housing finance data. Also on Thursday, data on durable goods orders, a measure of business investment, is released together with pending home sales, the Kansas City Federal Reserve Index, and the weekly data on claims for unemployment. On Friday, the advanced measure of GDP is released in the US. Economists expect that the economy slowed to a 1.3% annual pace in the December quarter, down from 2% in the September quarter. The Federal Reserve believes this slowdown is temporary, thus its decision to lift rates in December. The US earnings season was also set to ramp up, with 134 S&P 500 companies set to publish earnings. Big names populate the coming 5 days, including Apple and Amazon. If some of these heavy hitters can beat expectations, then there is a possibility we will continue the general rally in risk assets that began in the wake of the European Central Bank meeting.